Happy all-time high day, Bitcoiners. We made it. We made it. We are going to make it as well. It is up to about $66,500 now, past that 64.8 all-time high today. We knew it was coming. We felt it coming. And boy, it came fast, faster than I had hoped even than it would. Very exciting to have survived this 50% downturn. All of you who came in recently and held through this 50% drop, earn some stripes. Bitcoin rewards those who hold through these kinds of downturns, develop that conviction, and turn everybody into hodlers and builders and educators, and just incentivizes its own development, improvement, and adoption. It's amazing to watch. That's why we're all here. We just can't look away, and we just can't resist being a part of this moment in history. I'm Brady Swenson, head of education at Swan Bitcoin. You can go to swanbitcoin.com and start stacking sats today. We've got the fastest onboarding in the industry. You can be stacking sats in 5 to 10 minutes for 90% of our customers. So go check that out. Get started now. Makes it an awesome way to onboard family and friends as well. It's a great experience to stand next to them and help them in just 5-10 minutes be able to start an account and be stacking sats directly from their bank account in that short amount of time. And if you're going to do that, grab a referral link for the Swan Force. We have 9,000 people on the Swan Force now, which is incredible, out there getting paid to recruit new Bitcoiners. And you can grab that link at swanbitcoin.com/enlist, ENLIST, enlist in the Swan Force. And your referrals will get $10 of free Bitcoin to start their Bitcoin journey. And you will stack 25% of their fees for a year, which can really add up to a lot over time. We have a lot of happy Swan Force members seeing those deposits come into their account for their referral rewards. We've also recently launched Swan Advisor Services. This is the first Bitcoin-only platform for financial advisors. I think this is going to be huge for Bitcoin. It's a way to tap the $10 trillion under management by financial advisors around the country who each have a set of clients that they're managing funds for. They can responsibly invest that money with Swan using Bitcoin, no exposure, no temptation by these shitcoins out there and other financial advisor platforms. So we're Bitcoin only, focused, laser focused on the world's greatest monetary financial asset in history, and want to get as much exposure to families and small companies, small businesses out there that are trying to accumulate generational wealth. So Swan Advisor Services is at swanbitcoin.com/advisors, ADVISORS. And with that, we'll jump into today's episode to celebrate the all-time high with our friends Nik Bhatia and Parker Lewis. Gentlemen, Parker, how are you?
Doing well. Glad to be back on. Feels like only a few months ago, but a different day for sure.
Yeah, absolutely. Nik, welcome back, man. Nik, I think you're on mute, bud. Let's see, it's not on my end, right?
What's up, Brady? How you doing, man?
Doing great. Doing great. So all-time high today. How's it feel? You guys have been in the game for quite a while now. I know Nik came in the scene in 2017, so it's been at least 4.5 years now. Parker, how long have you been into Bitcoin?
Yeah, about the same time frame, kind of 2016, 2017.
Yeah. So we all kind of came in around the same time. 4.5 years now, went through a bear market, went through this kind of short, 6-month bear market, you could call it. How do you feel? I mean, how do you feel as a Bitcoiner? Are you guys sort of just like, emotional at this point, just kind of even keel in it for the long term? Or does this still sort of, get you excited a little bit and make you want to take a little time to celebrate?
Well, I think that even though it is very exciting to hit all-time highs, there's a lot of work left to do. And, I was thinking about, all-time highs bring parabolic moves. The parabolic moves bring a whole new set of FUD. The volatility, critique, keeps rearing its head. So there is just a lot of work to do as, we break to new all-time highs. it'll be fun. I'm definitely here for the memes, but we do always have to be working on Bitcoin to make it better, because we always say that better work gets done in the bear market. Well, while we're in a bull market, we have to make sure that we're still doing the work.
Absolutely. Well said, man. Parker, what about you? Just keeping the nose to the grindstone, did you take a moment to high five some of your Unchained colleagues today?
Yeah, it's jokingly, it's a within the company, it's on to Cincinnati type. For people that don't understand the football reference, it's kind of like, all right, it's on to the next thing. And Brady, as I'm sure from how fast things move in Bitcoin, that there's just so many things going on in terms of building a company like Unchained, that it's like you are celebrating, and kind of it's both. It's like I like to think about as volatility up and volatility down is both celebrated. I get joy out of buying a falling knife when other people are panicking, and then on the other side, when Bitcoin's breaking through an all-time high, I think the most important thing that it sends a signal to is that Bitcoin is emerging as the consensus as a global standard of value. That the input are Bitcoin's monetary properties, and the output are people looking at the equation and making the decision that they need to adopt Bitcoin. So the all-time high really signals that more and more people are adopting Bitcoin, and a larger monetary network is a stronger monetary network, a more secure monetary network, and a more valuable one. So I think it is cause to celebrate. You're not trading to get more dollars, but the war of ideas is being won, which is what this signals.
Yeah, that's well said. It's number go up is great in a lot of ways, and like I was saying at the beginning, Bitcoin incentivizes its own growth, its own adoption, and on days like this, it really signals the beginning of a big mainstream media spotlight coming onto Bitcoin that happens during these cycles, and we can hope that we are well prepared to take advantage of it in this sort of relatively fledgling Bitcoin only industry that's really come alive and blossomed over the past 18 months, 2 years. So we can see how prepared we are after going through that first big bull run this year, and now we get the opportunity again to hopefully perform even better this time around, and creating new Bitcoiners who really understand what's going on. So Parker, the Texas Blockchain Summit happened recently, and just in general, you've been working really hard to kind of bring a grassroots Bitcoin community up in Houston and Austin and kind of Texas in general. And there were several politicians at the Blockchain Summit. The last episode that I did here were with 2 politicians as well. And there's just more and more discussion about Bitcoin and politics. That discussion's happening, and it's picking up steam. I think it's going to be really important to the way Bitcoin is adopted in the United States for a lot of reasons. I'd love to hear where your mind's at now as we've dived into this political discussion.
Yeah, so I think that in certain ways, the Texas Blockchain Council, they've gotten some important pieces of legislation through, which have been really important. I think kind of on a more broad scale, just the idea that pushing and pairing up Bitcoin, blockchain, digital assets, NFT, I think it sets people back from understanding Bitcoin. And so I think there's both good and bad that came from that. Good is that we had the time and attention of Senator Cornyn, who's from Texas, Senator Cruz, who's from Texas. I was particularly impressed by how clear and well-spoken Senator Cruz was on Bitcoin in Texas, and specifically mining, and understanding kind of intuitively what it represented to not just Texas from a monetary standpoint, from an inflation perspective, but then also from an energy perspective. And so he was there. Senator Lummis was in town. Warren Davidson was in town. That we have a lot of people's attention. And I think that is a function of growing adoption. More broadly, beyond the Texas Blockchain Council, I do think that, there's the infrastructure bill that's happened in DC. There's more discussions of the way that Bitcoin can or will or should be regulated at the federal level. I think that the states are going to have a really important part to play in pushing back against federal government overreach. Ultimately, at the end of the day, everything is good for Bitcoin. Anything that I like to say that nothing good will come of Washington, D.C., but it is time for the states to assert their rights. And the most effective way to do that is to have state legislatures and state executive branches understanding the importance of Bitcoin to their citizens, so that when those marginal overreaches or potentially significant overreaches that come from Washington, D.C. happen, that it's not just individuals on the front line, the foot soldiers. It is actually states that understand the significance and importance to protect the citizens in their states. So there's a lot that we're doing. Again, it really started off as a joke. There are bigger things. I might go out on Twitter and try to recruit everybody to Austin, or get people, I don't really try to get people to Houston. There's too many people there already, but there are big foundational things that exist in Texas that are really the tailwinds that's causing Bitcoin to really find a hub in Texas. It's the regulatory environment. It's the energy resources. It's the energy grid. It's people, that the culture of the people. People love freedom, but it's also, Austin's a tech center and Houston's an energy center. And those are the two things that, when you have the rest of the world essentially in a diaspora, because there's a lot of bullshit and individual liberties that are being threatened. The former hubs of Bitcoin were San Francisco and New York, and there are a massive number of free agents. And when they look around the country, it's not because I'm sitting on Twitter telling everyone to come to Austin. There are really strategic reasons why Texas is well set up to be a leader in Bitcoin. And we're just trying to amplify that message.
So Nick, as a Bitcoiner and observing the sort of a beginning of this discussion, it started with the infrastructure bill, and we saw kind of what played out there, and over sort of a mad dash of a few days. Coin Center jumped in, was advocating on behalf of Bitcoin, but also just crypto in general. And more than several now, a dozen or more politicians that have come out and are publicly supporting and owning Bitcoin in various ways on both sides of the aisle. Do you have any thoughts about the importance of Bitcoin bipartisanship, or it becoming a single issue voter issue?
Bitcoin, we can tell, I was in Austin with Parker. You can tell that Bitcoin does have the support of the Republican Party. So I think it is very important to make it a bipartisan issue. And it is, because if you really think about the empowerment side, and the freedom side, it kind of blends both of the parties together. But Bitcoin really is more of an American issue than any partisan thing. And I think we have to have leadership from states like Texas. The vibe in Austin, during the Texas Blockchain Council, was that Bitcoin mining is coming to Texas. Texas is going to be the capital of Bitcoin mining for the world. And the people, Parker was saying, the culture of the people is one of, it's a deep energy culture. And the energy culture understands proof of work in a way I think that all Bitcoiners do. Bitcoiners understand that the energy that is consumed by the network is the security. It is the value. It's everything. And so Texas is looking at that and saying, we are an energy forward state. Therefore, we have to understand proof of work better than anybody else, better than the other 49 states. We have to embrace Bitcoin mining. We have to go all in on mining and bring Bitcoin to the United States. And through that, there are going to be companies that come to Texas, make money, and then gain power on the federal level, the national level, and be able to make Bitcoin regulation in their own eyes. And that is the future that I see. And that's why I think leadership from Texas is so important. The Houston-Austin connection, but just in general, the culture of wanting to win all the block rewards, especially off the back of what happened in China. So I'm excited to see the leadership from Texas, and I do hope that it spills over into the other 49 states and the federal level.
Yeah, and we're seeing jurisdictions not just seek Bitcoin itself and Bitcoin mining itself in the industry, but also the Bitcoiners themselves. And Parker's explicitly out on Twitter, half joking about bringing all the Bitcoiners down to Austin, and it's actually happening. So it's not wholly a joke. Okay, let's move on to talking about some financial and economic stuff. First of all, the ETF. It's big news of this week. It's the quickest inflow of funds into an ETF in history, over $1.5 billion. Over $1 billion in the last day and a half, and it's the first exchange traded fund to crack $1 billion in assets under management in less than 2 days. Pretty amazing performance for the ETF. There's also some mixed news about this being a futures ETF. So I thought we'd discuss one, just the performance of this ETF and what that signals to the market. And then maybe we will dive in after that into talking about potential downsides of this being a futures ETF as opposed to a spot ETF. Parker, we'll kick it off with you. What does this tremendous success, this launch, mean to the market?
I think I'm just going to beat a dead horse that it is it is one of those things that everything is good for Bitcoin. I don't think that an ETF is more important than more and more pieces of infrastructure coming online to make access to Bitcoin be easier or kind of more common to someone who is used to working with a financial institution. As an example, the work that NYDIG is doing with local and regional banks to basically turn up those banks. It's just the more places that people can buy Bitcoin in ways that they want to buy Bitcoin, easily buy Bitcoin, that's good. So I think that the actual most important thing about the ETF is not adoption. It's that the SEC has basically greenlit and said Bitcoin, whether it's physical or future, that we're okay with that being in a security and that being in an ETF. I think that creates precedent at the federal level that is really important. Not to say that there wasn't already previously precedent, but that with each piece of precedent at the federal level that comes, it's harder to go back on that and be more restrictive. That you have an ETF that benefits Wall Street, but then people that just want to interact directly with Bitcoin, some different, more onerous set of circumstances, is going to be more difficult to do that. Be more difficult to ban Bitcoin. So I think that the precedent it's setting, the mainstreaming more conceptually, is really the relevance here. I think that it is actually better that it's a cash settled future rather than a physically settled future. Again, my opinion isn't worth a lot, but the way I think about it in terms of the sense of it's just my opinion. Doesn't mean it's fundamentally true or not. It's not because you can't manipulate price. I think it's generally a good thing that Bitcoin is not being pooled like GBTC. GBTC has $550,000 or 550,000 Bitcoin. I think when that converts to an ETF, you'll see actually a consistent stream of Bitcoin coming out of an ETF. Because what happens is if you start your Bitcoin journey, you might think that dollar exposure to the Bitcoin is what you want. What you actually want is exposure to Bitcoin, and you do not have it if you are in an ETF or in something like GBTC. And so there's a knowledge gap that as people understand more about Bitcoin, they might have started in an ETF or GBTC, but then they transition to the better ways to hold Bitcoin that eliminate counterparty risk and that are more secure. So I don't fundamentally think that from a flows perspective, it's a game changer. If people wanted to buy Bitcoin in a public vehicle that they could buy in their retirement account and there was a security, GBTC did exist, and there's a shit ton of Bitcoin in there. And when it converts to an ETF, it's going to create an outflow of Bitcoin from that trust, I believe. So I think it's important, but for maybe different reasons than many other people might think of in terms of price or flows.
Yeah, that makes sense. Nick, what about you? What's the importance of just the absolutely crushing performance, the historic performance of this Bitcoin ETF in its first couple of days?
Yeah, I'll start with the downside to the ETF first, because everything is good for Bitcoin. The news is good. So the downside is for people that buy this ETF, basically, because it's a futures ETF and because of the way that commodity futures markets usually work. There's a premium that you pay when you buy futures, and if you're an ETF that owns futures, you have this constant roll risk exposure because your contracts are always expiring. You're buying contracts into the future that are more expensive than the ones that are just expiring that you have to sell out of. And in that way, you are spending extra money all the time to buy the exposure to Bitcoin. So you have this negative performance drag called a bleed on your performance in this ETF. So if you own this ETF wanting to get exposure to Bitcoin price, you're not even really going to get that. You're going to get Bitcoin minus. I don't know what the statistics are going to be, but you're definitely not going to achieve the same return as Bitcoin. That is one issue. There's also the fact that you don't own the Bitcoin; it's Bitcoin futures, and you have counterparty risk to this vehicle. So that's why services like yours exist and Parker's exist, because people want to have access to their Bitcoin. They want to be able to withdraw Bitcoin at all times, and the futures product is very different for that. But onto the good news. Like Parker was saying, the precedent is so important. The federal acknowledgement at the SEC level that this thing can be a commodity underlying futures in an ETF, and that the public can buy it without really any burden of proof on them to prove that they're a qualified investor, like you have to do to get GPTC at the institutional level, things like that. So it is a huge deal for a general awareness and regulatory landscape in the United States. It does set a very loud example for the rest of the world that the U.S. is pro Bitcoin. So I think that's probably one of the biggest takeaways. And in terms of the individual ETF inflows, it is astounding to let's say observers that are comparing it to GLD and being like it beat gold's record. But look at the price already. It's already telling us that the interest is so intense from every corner of the world. And there are many people that, while they could have opened an account with an exchange in the past, they have been scared to. And this gives them the first, taste of approved Bitcoin ownership, right? They think of the government as the permission giver, right? People that own Bitcoin up in this point have not asked for permission from the government to do it. They've just done it. But people that are, of the type that want to wait for the government to give a green light, this is their time now. So I do think it's going to trigger a huge wave of demand to follow.
Fidelity had some analysis that they called that showed that there was a lead lag in CME Bitcoin futures, and that that futures market was leading price across USD-based trading. So basically, these short-term speculators were sort of leading price discovery. Is this something that concerns you guys for this larger ETF? Is it good or bad for long-term investors, or just doesn't matter over a long enough time horizon? Parker, I'll shoot that over to you.
Yeah, I honestly think in the long term it doesn't matter. That there are only 21 million Bitcoin, and that if you control the keys to them, what happens at some other part of the network, it's not that it's not relevant to you, but any risk that it could create is materially reduced, and that there is because Bitcoin eliminates all moral hazard, because there aren't socialized losses at the network level. There's a maximum benefit and a maximum penalty for either choosing the right decision or choosing the wrong decision. And that this idea that, because there's a lot of concern about how or whether central banks and governments have manipulated the price of physical gold through the futures market, but realistically, they're in control of both the futures market and the physical supply of gold, which is not true in the case of Bitcoin. And so I think about it from a functional perspective, where anytime somebody buys or sells a future, there might be someone going into a spot market, buying and selling spot. But if you are on the other side of either of those transactions and you take your Bitcoin off the exchange, there are only 21 million Bitcoin. And so if whether there's a spot ETF and it's fractionally reserved, whatever might happen, that people demand Bitcoin because of a fixed supply of 21 million. And that everything that happens on the periphery at the edge of the network is contained to that edge. The risk would be if 2 million Bitcoin ended up in a single ETF, or 5 million Bitcoin ended up in ETFs in general. The reason why that fundamentally won't happen is because it's an inferior way to hold Bitcoin, and incentives matter. So I don't worry about it long term. I don't worry about price manipulation. I believe there was a time when the ETF, or sorry, not the ETF, the futures were launched initially, and people would say, "Oh, Bitcoin went down because there's now a way to short it," and it's like, no, absolutely not. Fooled by randomness. Bitcoin went up by 20x, got out ahead of its skis, and it corrected, and now it's 4x. It's 2017 high, or 3x, or whatever it is. People trading on the periphery that are trading dollars to get more Bitcoin they're trading Bitcoin to get more dollars, are playing the wrong game. Slowly but surely, people figure out that you're supposed to be buying Bitcoin to accumulate it because you're going to need it to pay for food, gas, water, healthcare, whatever leisure you enjoy in your life. And that's a one-way function. Only more people figure that out. And that is what drives Bitcoin's purchasing power, which is the underlying adoption, which is driven by 21 million Bitcoin.
Yeah, Nick, just more in general, related to that, the financialization of Bitcoin, right? The Wall Streetification of Bitcoin. These big legacy banks and financial institutions adopting Bitcoin in various ways, offering Bitcoin-based financial products, etc. Like companies like Unchained Accepted, who are Bitcoin native companies, right? These are legacy institutions with probably definitely still denominating their returns in USD, and not thinking of Bitcoin as the future monetary base of the global economy. What do you think that might do to Bitcoin? Is it a risk in any way? Will it delay adoption? Is it a way for the government through these big corporations that they have close ties with to somehow co-opt Bitcoin?
Yeah, I think that none of it will matter in the long term. They're all too small to have a big effect on Bitcoin. Bitcoin is extremely global, and one of my favorite things about the Bitcoin price is that there is no one Bitcoin price. So there's transactions happening around the world, and every time a transaction happens, a different exchange rate is struck. And so I don't think one futures ETF will have any grand effect on the price, especially because there will be more and more vehicles that will get people exposure to Bitcoin. GBTC does have concentration risk, and this point about when it does get approved to become an ETF, that there will be an outflow, and that will affect the market. Yes, because it's one of the biggest, one of the highest concentrations of Bitcoin that we have in existence, over 500,000 Bitcoin. So I don't think that the financialization is a threat to Bitcoin. It's just going to increase adoption. It's honestly a little surreal thinking back, 5 years when the CME had just launched their price data tracker, and put out a paper, talking about the Blockstream data that they're using. And it was clear that the government wasn't going to get in the way of companies in the United States embracing Bitcoin. And the CME, we have to give them a lot of credit. They were, they and Fidelity were the two legacy companies that really took a big role in leading the way on Bitcoin from the institutional side. The CME went forward with futures years ago, and the CFTC has acknowledged that Bitcoin is a virtual commodity for 7 years now. So I don't think there are any regulatory risks here, and I don't think that financialization poses a threat to the decentralization or the ethos of Bitcoin. It's too global, it's too decentralized already, and people are too aware that they can control Bitcoin keys themselves, and the tools are too easy to use. So I think Bitcoin's in a really good place.
Yeah, I would just add something there that Bitcoin is going to definancialize the rest of the economy faster than the financial markets are going to financialize Bitcoin, right? So more people are going to realize I have these stocks that I've been using as monetary substitutes. I have these bonds that I've been using as monetary substitutes, as near store values, because I'm just trying to outpace inflation, or maybe I'm trying to outpace inflation, or I'm just doing it because everybody else was doing it. And then they figure out, oh, hey, there's this finitely scarce asset. I can transfer it to anybody in the world, and I can hold it without counterparty risk, sell stocks, sell bonds, buy Bitcoin. And if you start to understand that, there is no way that you want to give away the principal benefits of Bitcoin and stick it in a pooled vehicle where you do have socialized losses, where you do have risk of censorship, where you do have counterparty risk, and typically speaking, probably 3 or 4 layers of counterparty risk. And so I think that the economic incentives are what will dictate that Bitcoin not have a risk. Agree completely with Nick that there isn't a risk to the financialization of Bitcoin. A lot of people will try to financialize it, and those people will fundamentally miss what's happening. And I also like to point out that if you buy Bitcoin because of the ETF launch, you're buying it for the wrong reason. You would have already bought a lot more of it if you understood that there will only ever be 21 million, and how that's actually possible.
Yeah, and also I want to bring in the Lightning Network really quickly. How are you going to use the Lightning Network with shares of an ETF? You're just going to be locked out. The Lightning Network is the most exciting thing happening within Bitcoin. The ability to transact globally, instantly, and in the streaming manner. If you can't use the Lightning Network, you're not really appreciating what Bitcoin is and the power that it can have over the way that we do business in the future. So an ETF doesn't accomplish that at all, and I think there's a big difference between people that are okay with a negative roll yield and people that want to use Lightning Network.
Yeah, we're going to come back to the Lightning Network and talk about it in a little while because there's just so much exciting developments going on Lightning Network, and Nick has thought a lot about how the Lightning Network can really turn Bitcoin into an even more functional financial asset in a global economy. So we'll come back to that, a little bookmark there, but I want to turn to just another general financial issue or question for you all, and this is the repo markets. So the reverse repo market has topped $1 trillion every day since August 11th, and this is an historic aberration. So would love to hear you, Parker, explain what is possibly going on here and what this might be saying about the state of the underlying plumbing of the traditional finance system.
All right, this is the reverse repo. Nick might be able to explain like the technicals of reverse repo better than me.
Nick, you want to go first and underlie it?
Why don't you go first? I'll talk about kind of conceptually what I believe is happening.
Sure.
Maybe if Nick could just like lay out for people, this is what reverse repo is.
Right. So, the fact that banks and institutions are using the reverse repo facility at the Fed, think of it like overnight parking. You go to the Fed for the safest overnight parking of your capital. That's what the Fed's reverse repo facility is. And so the fact that $1 trillion or more every single day is coming from all these counterparties to the Fed overnight means that a few things. One, they don't want to own treasury, but they don't even want to own treasury bills. So in finance and asset management, we miss, you know, we always have to compare relative value. That's all that matters. So when we're talking about the Fed repo facility, it's like versus what? If we're talking about the stock market, it's like stocks versus maybe domestic stocks versus emerging market stocks. Or if we're talking about bonds, it's corporate bonds versus treasuries. But if you're talking about Fed reverse repo, you're talking about Fed reverse repo or treasury bills. So there's something going on in the plumbing of the market, which is saying that there's a risk to owning anything except keeping your money overnight with the Fed. Just they don't want to own bills because let's say bills have, the debt ceiling issue, for example, and if you're in a bill facility, you're going to own something at a date that's going to be in jeopardy when, just say the debt ceiling issue causes treasury bills to go awry, and that's happened in the micro level, right? We're talking about basis points here. So, a treasury bill at 10 basis points versus the Fed repo facility at 5 basis points, that 5 basis points premium of the bill is not enough to attract people to go into the bill. They would rather just keep it at the Fed. And so there's some internal worry there. There's also the fact that there's way too much QE in the market. So the banks have all these excess reserves and, they have nothing else to do with the money. So they're just, kicking it back to the Fed. So there's a lot of nuance there, but the Fed is going to take the huge reverse repo balance every night as an indication that they need to stop doing as much QE, what they call the taper, just less heroin, less monetary heroin every month. And so that's like the next monetary policy that we'll see is the Fed, cutting back on their QE program and, predicting what's going to happen after that in terms of the second, third order effects of the Fed tightening monetary policy is an impossible thing to do. And I think it's always, the Fed is always going to come back and end up doing more QE. So how much do they pull back? How long is it going to last? When do banks are in a liquidity crunch again? Right now they're flush, right? So the opposite will happen when the Fed stops and they'll have to come back again. We've seen this now going back and forth for 12, 13 years now.
Thanks, Nick. That was great, Parker.
One thing, so let's kind of go to school here with Nick. I follow this less closely on a day-to-day basis, but these people have such a tangled web, right? So when they affect QE, they go into the market and they buy a treasury and they create a new reserve. That reserve can be converted to physical cash. It can be, people say they don't lend reserves. They do lend reserves, or reserves transfer from bank to bank, but they can use those reserves to create new deposits and loans. But when they affect QE, say they buy $1 trillion of treasury, the Fed now holds treasury and $1 trillion new dollar reserves exist in the market. When they do a reverse repo, they're taking dollars out of the market. So the Fed is then taking treasury bills and giving them to market participants and taking dollar reserves out of the market. Nick, that's my understanding. Is that, or do I have that backwards?
Yeah, they are taking dollars out of the market. That's right, on a nightly basis.
But in total, the total amount of reserves, the balance sheet is still expanding. So reverse repo, which is taking dollars out of the system, quote, dollars out of the system, is going up, but they're still putting new dollars in. And what it feels like to me is that certain places of the market are strained and need dollars, and other parts of the market are flush. And that flushness is also creating a problem. There's two different problems. So it's literally whack-a-mole. It's like, I got to put dollars over there, because once the Fed puts dollars in the system, they can't make them go where they want to go. They only get that shot once. And so, because you would say, hey, if you want to take dollars out of the system, why don't you just sell the treasuries that you bought? But there's a reason, and it's because the first operations are creating problems from a market structure perspective in two different ways. There's people that need more money that don't have it, and that are going to cause a credit run if they don't get it. And there's other people that don't need the dollars and are trying to give it away and trying to get anything that they can get for it without any perceived counterparty risk. And so, it is a mess. If you act, I would love to be to sit in those conversations and listen to these idiots talk about trying to push the thread back in because they pulled on it for far too long. I always just like to articulate that for people, which like they could just sell the treasuries. They're not doing it. They're not doing it for a reason. And that's the real signal. That it's like, why are they both putting more dollars in the system as well as taking them out at the same exact time? And I believe it's because their original dollars that they put in, or it's like a pinball machine. It goes to the places that they don't actually need it, and they need to insert new dollars at the same time where they pull out the slush fund. So we'll see how it plays out. But it's definitely a signal that the market structure is broken.
Yeah, and I want to bring it back home. The people need to understand the Fed has, what Parker is saying is the Fed's monetary policy mechanisms are broken. They don't work the way that they intend for them to work, which is to, cause credit to proliferate throughout the market. It's not happening the way that they want when they do QE. And then they get all these reserves and they have to suck them back out of the market every night because there's just too many and there's a mismatch there. So it is why I predict that the Fed will use, and the government, US government, will use a Fed coin, a CBDC, to engage in universal basic income and change the monetary policy mechanism from QE to UBI and over a longer term time horizon. And so this is something that people need to watch out for. It's not something I'm advocating for. It's just something that I'm predicting will happen based on the way that politics is going in this country, the way that UBI is already making its way into all of our checking accounts, child tax credit, for example. UBI is happening. It's a trend. The Fed is broken. Everybody realizes it, that they can't get what they want when they do QE. It doesn't really work. And Congress realizes this. So Congress will have to legislate something on this matter to get a Fed coin in their eyes, I think, and get a little bit more control of it, maybe get control away from the Fed. But these are the things that I'll be watching for, on the legislative side and the monetary policy side over the next 5 years. Where does Fed coin come in? And I do think it comes in reinventing the way that the Fed prints money, basically. It all comes, for Bitcoin, it all means the same thing, is that 21 million is the only thing that matters. And so in a flood of dollars, it'll just make Bitcoin's value more apparent to the market. But on the Fed side, the Congress side, these are some of the things I'm watching for.
I'm personally a fan of UBI because I feel like if you're going to print the money, give it directly to the people instead of the big banks or buying up, assets that belong to the big banks and the big corporations. Just give it straight to the people. They can maybe get into Bitcoin, DCA a little bit, and have a little bit better distribution or more even distribution of the Bitcoin. Anyway, that's my rationale. Just real quick, you guys have, been in the belly of the beast. Both of you have worked in big finance, and, we're on this sort of schedule of, we, build up a lot of just asset inflation and everything's overpriced and overinvested. And then there's a crash, and it seems to be happening like every 10 years. It's been 10 years. Everything feels completely frothy. And people have called it the everything bubble because it just seems like it's not just one sector, right? We have other complicating factors because of COVID and shutdowns and supply chain issues, et cetera, et cetera. So is this just imminent? What are we looking at over the next year or two? Are we going to have to weather a big kind of global or at least national economic storm? What's your gut feeling about this? Your spidey sense, Parker?
Yeah, I think that the right way to frame it is that it's not that these financial crises happen every 10 years. It's that financial crises become inevitable because of the actions that the central bank take. And this was something that on my own path to Bitcoin, Saif Dean Amoose, the author of the Bitcoin Standard, really helped me understand. And I've done a lot of thought about this particular subject, that how and why the actions that central banks take, it's not that they just don't help, it's that they actually create the problem and progressively cause that problem to become bigger and bigger. And so it was when, post financial crisis, the Fed pursued a massive experiment, which was printing $3.6 trillion over the course of 5 years, essentially to prop up the credit system. The operation of QE they had been doing before. It was just slow and steady wins the race, and they had been debasing the dollar and hadn't had to take extreme steps. But what happened in 2008 and 9 was a function of what had happened in the decades leading up to it. What happened in March of last year, really September of 2019 and then March of 2020, was the play forward of the same exact dynamic. It was that there are degrees of system leverage that create inherent economic instability, and that the instability originates from the financial system. And the more that they do this, the more they get us out further on the same ledge. So I don't think about it as a cycle. I think about it as closer and closer to the end game. And the framework that I think is right to think about it as, is this the last cycle? Is this the cycle where it all falls apart? I think it's very difficult to say that with a high degree of probability or confidence, because there is also a fact that economic systems are incredibly complex, and that predicting timing of when something plays out I'd say it's an effort of futility. I like to think about it as playing through and surviving all weathers, that you're at point A, you're getting to point B, whatever happens between those two things, you need to survive, and you need to be ready for all scenarios. About 3 years ago, I did not think that this cycle would be the last cycle, or I wouldn't want to say cycle, but that this financial crisis would be the last one. What we're starting to see on the supply chain side, and knowing how much fragility there is, and knowing how much imbalance there, fragility in the financial system, imbalance in the economic system, I'm, becoming, I wouldn't say weighting it over 50%, but it feels like this might be the time where there isn't like another 10-year period and then we see another financial crisis, that this financial crisis in the dollar economy could just spool out and we end up on the Bitcoin standard at the other side. There will have to be pain felt. But the reason why I feel that way is because the extent by which the Fed is having to print dollars, 4.7 trillion in the last 18 months, I'd say 20 months, that exceeds everything that they did post-financial crisis. That this is worse than post-financial crisis, and that you can't just take a highly complex economy that stood on top of a highly fragile financial system and basically give it, shock therapy treatment, where you shut it down and you try to turn it back on like it's a light switch. That's not the way it works. And I think it's done. Irreparable harm was already done to the financial system as a function of the central bank, and then that was just turbocharged by what governments did in the response to the pandemic. Like they just fucked with people's lives in an unimaginable way. And so I think that this has to play out, and that we're not going to see like a 2008 to 2009. But I also I wouldn't put like above 50%. I just think that it's a lot more likely than I thought 2 years ago, and that when I think about that, it is dynamic with Bitcoin, that when you are adopting Bitcoin, you are adding energy to a new monetary system and you are subtracting it for the other. And they're directly competing with each other. So as each individual decides they are going to store wealth in the Bitcoin network, they're pulling energy out of the legacy monetary system, and it's impairing that system, and it will accelerate. And so when I think about how Bitcoin has been adopted historically, if we estimate, and I'm very conservative, but I would say a maximum of 10 million people have any material exposure to Bitcoin today. Maybe 150 million people own some of it, but materiality, which I generally define as 5 to 10%, is really those are people that have actually consciously decided to store wealth in the network, varying with degrees of how well they understand Bitcoin. But in Bitcoin adoption ways, it generally increases by 10x, and it generally is corresponded with halvings because there's a supply shock. That to cycles of 10x adoption gets you to 1 billion people, and that will be the vast majority of all wealth in the world, because the wealthiest 1 billion of 7 to 8 billion people do probably consume 95% of the wealth in the world. That at that point in time, in the next 10 years, we're likely on a Bitcoin standard. It will be path dependent on how kind of this current situation with the dollar economy, the euro economy, and the yen economy play out. But I think things are accelerating and a lot more fragile, and I don't see how or why those monetary systems better coordinate supply chains that are actively breaking down in that world. Like there are not shelves that are starting to become empty because demand is increasing. It's because the supply chains are breaking down, and that is less supply with comparable demand.
Yeah, and a massive amount of money printed, so it's just a sell-through, reinforcing effect on inflation. Nick, any thoughts on? Oh, go ahead, Carter. Nick Parker. Sorry, did you have something
I
else
was
to
just
say?
going to say that it's actually the money. It's the money that, and this is something that's a fundamental concept. It's the money that allows supply chains to be created, that allow to figure out through trial and error what things want, what people want, and what to build and how to build it, and then to get those things built. That the money is actually the thing that causes the supply chains to form in the first place, and that the printing of money is actually what causes those supply chains and the monetary function to be distorted. Ultimately, it's like people think that hyperinflation happens because there's just too much money. It's no, the actual printing of money screws up the balance of the economy, which causes the supply chains to form based on that monetary unit to literally reverse. And it's like, imagine 10 people in a supply chain, and once one of them breaks, that impacts the other 10 people's businesses. And if there's a high degree of fragility where it's not 1 out of 10 breaking, supplier going down, it might be 2 out of 10 or 3 out of 10, that there's a ripple effect. Like this whole thing around autos was, there was a chip missing. Now there's apparently a part in the chair that can't, basically make a seatbelt. And so it's like when one small piece gets screwed up, it impacts, an entire segment of the market. But I just like to key in on for people that it's actually the money printing that fundamentally causes the supply chain to break. It's not just because there's more units of money. It's that money creates supply chains and economic structure. Printing money destroys it effectively.
All right, over to you, Nick.
Yeah, in terms of the economy and especially financial assets, the stock market is now the Fed's unofficial mandate, and so when stocks break down, it's become a matter of national security, and so in that way, the dollar will always be attacked by the Fed in favor of asset prices. Because people own assets, they own stocks. Both people own stocks in the United States. Congressmen and the elite, they own stocks, and so the stock market is the national security item of number one importance to the Fed, and I do believe that's how they'll continue to act. So we've been in this dollar in disrepair state since 2007. There's nothing that can really fix it. It's permanently broken in the way that the Fed had designed it in the first place. It's also, all the banks' losses are now socialized at the Fed level around the world, including Europe, which is a big problem that we can never come back from. And so the supply chain breaking down is a great opportunity for Bitcoin to denominate the building of the new supply chain. So, legs of that supply chain that were broken, that were denominated in dollars, need to be rebuilt, denominated in Bitcoin. And that's how Bitcoin can continue its monetization process and its adoption.
Excellent. Nick, I just wanted to spin it over to a short discussion about the Bitcoin yield curve, which you originally wrote about. I think it was in 2018, maybe summer 2018, the Lightning Network reference rate. And, that was early days for the Lightning Network, very early days for the Lightning Network. It launched in its just like beta form basically in January or February of that year. We've seen exponential growth of the Lightning Network over the past 6 months or so, which is super exciting to see. There's over 3,000 Bitcoin now circulating around in the Lightning Network, and it's still early days, but it's nice to see that it's confirmed that this stuff works. It's being used on a more of a massive scale in El Salvador, for instance, for remittances. The user experience on the Lightning Network has gotten way better over the past couple of years. So I would love to hear your thoughts on the development of the network, and if you've changed or evolved your thoughts on the Lightning Network reference rate and its importance to Bitcoin as an asset.
Yeah, it's still the Lightning Network reference rate idea is still it's still very early in that there aren't that many people that can or are equipped to route in the way that you can make a yield off of it. But the theory still stands, and quite strongly, I would say, because the number of people that are using the Lightning Network now, and the fact that people are earning fees routing, even if it's a small amount, it's very important for the counterparty build out of this yield curve that we have in Bitcoin. So you can earn yield in Bitcoin in hundreds of ways now, because there are exchanges that offer yields left and right, and there are other ways to earn yield in Bitcoin. They all have a counterparty exposure except for Lightning Network. And so where Lightning Network's yield is relative to other yields is something that we can measure, and I think that it will be referenced in the future in terms of the trade-off between counterparty risk and just channel management risk. And I do think we'll see Lightning banks offer that type of profit share to people. Stake your Bitcoin to me, and I will use it for routing capacity. I will earn a yield, and I will share that yield with you. That type of Lightning bank infrastructure. I'm sure that this type of activity will come about.
Yeah, exciting. Parker, do you have any thoughts about Lightning Network? Have you been watching the development of it and maybe talking with some actors in the space who are building on the Lightning Network? Parker, you're on mute.
My bad. I really focus less on the financing side of it, of what is the rate to route. I do find that work to be valuable, but I see Lightning as the most promising application that at least is currently in the market. It might not ultimately be the second layer. That I think that mass adoption is still to be seen, but it is certainly the most promising and most likely. I'd say it'd be fair to say that without saying that the end is known for scaling payments, day-to-day payments. Like I think conceptually it makes sense that not every small purchase, groceries, gasoline, buying a bottle of water, buying coffee, that all of those transactions will live on all nodes for the rest of the time. And that I am most interested and find Lightning to be interesting in the commercialization of Bitcoin as a transactional day-to-day currency. And I do think that a lot of the work that's being done in the space is advancing that. And I think that it's happening because there's actually the necessity. We see this on our side at Unchained, just when fees spike and you could have a $200 Bitcoin transaction, and you might need to send it at an inopportune time or a time-sensitive time, that there just are the reality that that doesn't mean the fees are always high, but they increasingly will be, and that we need a more consistent way to quickly and easily move smaller amounts of Bitcoin around. And so that's why I'm particularly interested in the Lightning Network. I think there are some questions about how I always screw up these two words, but topography or topology will work out in terms of the network, in terms of how efficiently, how little amount of Bitcoin that there needs to be within the Lightning Network to effectively route, and scale payments. That the goal will be to tie up as little amounts of Bitcoin to be able to route the most amount of transactions. And I have questions about, whether or not it will be, truly peer-to-peer, whether there will be liquidity hubs. But I am thinking a lot about how at Unchained we can be involved. But it's not for the end of just being involved in Lightning, really focused centrically to our clients of how we can add value to them. And that we do that very well in terms of long-term custody, helping clients buy and sell large amounts of Bitcoin. We're expanding that. And then we also lend against Bitcoin, and we do IRAs. But a big component of that, and I'm sure you guys are thinking about this as one, is helping people facilitate payments, helping people get paid in Bitcoin, whether it's a merchant or individuals working for companies and taking salaries. So I think Lightning has a big role to play in that, and I am really interested in it.
All right, that's fantastic. I'm going to give you guys a couple of minutes to talk about the work that you're doing, because you're both absolutely critical contributors to the space in so many ways. Nik, you've just launched a great newsletter. Could you please tell us about it?
It's called the Bitcoin Layer on Substack. I'm writing, my goal is to write research and analysis on Bitcoin and narrate this march toward world reserve currency, kind of thinking about it as picking up where the book left off, where the book explains the contextual reason for why Bitcoin will ascend the money pyramid and be, the world reserve currency standard. And on its path toward that, there's a lot of work to do. That's why I mentioned work at the beginning, is that there is so much work to do to get Bitcoin where it is from today to being in the hands of 1 billion people. And part of that process is education. So that's what I'm trying to do with the publication, and I hope people will go sign up. I'm putting free and paid content on there. So the paid stuff is, the more in-depth research and analysis that I'm doing. But if you don't want to pay for it, it's only $10 a month. But if you don't want to pay for it, please do sign up for the free version, because I will, publish content every week or two, and, trying to continue to educate everybody about Bitcoin that I can. So I hope that you'll join me along that ride. We do accept Lightning thanks to Substack's integration with OpenNode. So that's very exciting. And thank you to everyone who signed up in Lightning. There are a bunch of people out there. So I appreciate everybody's support. Yeah, Brady was one of them. And I even saw the screenshot you posted before I got the email notification for the new sign up. But yeah, I hope everyone will go join me. And if you haven't checked it out yet, please do go check out Layered Money. It does make a great holiday present with the supply chains broken, print on demand in the United States for people that are here. So go buy that for your friends and family as well, please.
It's a great summary of the history of money and how we're seeing Bitcoin be built in the way that we've seen money be built in the past, the kind of the proven way in layers, and why the Bitcoin way that money is being built in layers will avoid some of the pitfalls that layers on top of gold, for instance, met throughout history. Parker, tell us about what's going on at Unchained. You guys have been growing and hiring up many, many great Bitcoiners, and it's awesome to see what's going on at Unchained.
Yeah, we're actively actually pulling Bitcoiners from Minneapolis to Austin at the expense of Brandon Quittem, who is not only a friend, but one of your colleagues at Swan. So I just wanted to put that in for him one by one. We will get them all. But in addition to that, we're launching. We brought on Jeff Andrew in August. We announced that at BitBlock Boom to release our own Bitcoin IRA product where you can hold your own keys. I'd say right now, and in terms of the fourth quarter, that is our highest focus. We have it in pilot today. We're going to be expanding that more broadly to a broader set of our existing clients over the coming weeks, people who are existing Vault or loan clients that want to have their IRA with us. The benefit of it is you get to work with one party, Unchained, and you can basically convert an IRA to Bitcoin and then secure it, and kind of one structure rather than having to work with multiple different parties. You just work with Unchained. And then at the end of the day, you've converted your retirement funds to a way that's actually outside the US financial system, and in a way that can be held without counterparty risk. So that's kind of happening right now today. In kind of going into forward to next year, a lot of the staffing that we're doing is to automate. We have an OTC desk, and we're working on automating that and expanding it to more regions, and also will likely be reducing minimums, likely not getting to the world of buying kind of regular DCAs, but we will be in more states and automating buying Bitcoin directly to keys that you control multi-sig. So we're really excited about that. And we've got awesome bit devs tomorrow that I want to highlight for people. We're going to have a live rabbit hole recap before it. And then next week is the Houston Bitcoin meetup. So we're doing Austin 3rd week and Houston 4th week of every month. And we're just going to keep the steady drumbeat until Nick said, that Bitcoin is the standard, and Bitcoin has toppled King Dollar and all the weaker fiat currencies as well.
I'm jealous about that bit devs this weekend. And then, of course, the F1 race that you all are going to be attending at the same time. So I have never been to one. I'm a big fan. We'll have to come to one in Austin at some point. But, man, hopefully you do this again next year when I can make it.
We'll make a tradition out of it.
Good. It sounds like a great idea to me. Well, this has been a lot of fun. We got a lot of fans in the chat. Nick, here's a fan here that's got a signed copy of your book. So go out and check out Nick's newsletter, grab Layered Money, check out Unchained, go store your Bitcoin with them. It's a fantastic service and an incredible team. So thanks, gentlemen. I really appreciate your time. And I'm sure we'll see you again on Swan Signal Live with our rotating crew of amazing guests.
Thanks, Brady. Thanks, Parker.
Thank you.
Yeah, thanks, Brady. Nick, good to see you. Talk to you guys soon.
You too.
All right. Bye, guys. All right. Another great episode in the bag. So thanks so much for being here live with us, and thanks for listening on the podcast version. If you are live and want to subscribe to the podcast, it's at swansignalpodcast.com. And you can subscribe there and grab that in your podcast app. Listen on the go. We publish those every other week, of course, as we go live every other week on this podcast. We have a rotating guests, kind of a stable of guests that are 20, 25 of the best minds in Bitcoin who come in every other week and talk about Bitcoin and economics. Love hosting the show. Love having the privilege to speak with all of these amazing guests. Go to swanbitcoin.com. Start your stacking plan today. Start saving in Bitcoin. Automatic recurring buys straight from your bank account. Set up in 5 minutes, 10 minutes or less for 90% of our customers. We have the fastest onboarding time in the business. We also have the fastest onboarding time for corporations and companies and organizations. You can check that out at swanbitcoin.com/private. You can get onboarded in a matter of days. And we know at competitors and larger exchanges in the business, it can sometimes take weeks, maybe even months. So we've worked really hard to get that onboarding time, down as far as possible for entities. And it's a great experience. We have a lot of awesome feedback. We are launching very soon our Swan Advisor services. You can sign up to be in our beta program. We have some early participants already at swanbitcoin.com/advisors. This is the first Bitcoin only product for financial advisors. I'm super stoked about this personally, and I think every Bitcoiner should be, because this is a network of financial advisors around the country who manage something on the order of $10 trillion worth of assets. And imagine having all of these financial advisors out there who are trusted advisors for people's money. And they're explaining Bitcoin and orange pilling all of their clients. So this is a massive network effect for orange pilling. I think it's really important to bring those financial advisors to Swan, because we are Bitcoin only, and because we can kind of take that baton from financial advisors and continue to educate their clients with our world-class education services. You're going to be getting dripped emails all about what Bitcoin is, how to use it safely, privately, how to store your Bitcoin, the history of money, all of that. And of course, we have the podcast and shows. We have Swan Signal Live, we have Swan Lounge, we have Swan in Espanol, we have books, free books that you can download available that we put out all the time. We have Cafe Bitcoin on Clubhouse that we are a big part of there. Every morning there's a room going talking about the news, hundreds of people listening and talking about Bitcoin every single morning there. We're starting to run a lot of spaces. We have Alex, who's running spaces every morning, and you can check. We'll put his link to his Twitter handle in the show notes so that you can go over and follow him, listen to his spaces, and participate every day. So we're doing everything we can to create as much content as possible, to host events, to just build a community for Bitcoiners and really push this thing to create 10 million new Bitcoiners, not just people who own Bitcoin, but people who really understand what's going on here. So very excited about what's going on at Swan. Very excited what's happening with Bitcoin. All-time high day. I'm stoked. I'm full of energy, full of orange energy, and love all of you Bitcoiners. Thank you for being here today. This day is for you, for the hodlers, for the builders, for the educators who have built up that conviction to hold through the price volatility and see this thing through to a bright orange future. I'll see you next time on Swan Signal Live.